At Bitcoin Market Journal, we've developed an entirely new way of investing. And the genius of our approach is that we combine old school value investing with new school crypto investing. Our approach is simple. We make monthly contributions into a well-diversified portfolio of stocks, bonds, and up to 10% quality crypto assets. We hold on to them for 5 or more years. Over the long term, this approach has made much more money than traditional investors who stay away from crypto. We call them the non-believers. We know that it works, and we've had 5 years to develop the principles that explain why it works. You could read the thousands of articles, investor scorecards, and research reports that we've published on our site, or you can watch this quick video series. Today, the case for crypto. Why invest in crypto? Why invest at all? Investing puts our money to work. Intelligent investing puts our money into the companies and things and places where it can drive the most value. Instead of spending our money on more stuff that we don't need, intelligent investing lets us put our money behind the people and the projects that are bringing real value to the world. That's a good thing. But why crypto investing? Well, we're investing in 2 trends which we'll call the money movement. The first trend is money is going digital. Money itself is changing, just as we went from paper mail to email and paper tax filing to e-filing. Money is going from paper to digital. In many ways, this has already happened. You probably already use less cash and more Venmo, but this trend is accelerating. The second trend, money is going global. We live in a global economy, which means the arbitrary rules we put around dollars and euros and yuan are becoming increasingly irrelevant. We are all interconnected so that what affects one of us affects all of us. We see this most clearly during a banking crisis. And so a global digital currency is inevitable. In our view, the dollar will eventually be replaced by a global digital currency that is run by a global central bank. This won't be Bitcoin, which still behaves more like a tech stock than a stable currency, but Bitcoin provides the model. So investing in this money movement is like investing in the early internet. These twin forces of digitalization and globalization combined with the invention of crypto means that we can invest in the future winners of this new technology revolution, which is like investing in the early winners of the internet. This approach is totally different from most investors who are either totally opposed to crypto or all in on crypto. There's a better way, a middle way, and that's what we'll cover next. Keep watching.